You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 27th of February, as we watch February draw to a close. Well, the end of the week was wonderful. On the 24th of February, that was Friday, another up day in the markets. We saw everything up from the S&P 500 to QQQ, which is, of course, the NASDAQ 100, to bonds, and we're going to talk about our latest weekly vertical crossover in all of our charts. That was in bonds back on the week ending February 3rd. Has slid sideways for a while, started shooting up over the last day or so. We're happy about that. And gold also continuing to move up, and we had a weekly vertical crossover on that all the way back on the 27th of January, and we have seen that progress quite nicely, my friends. Let's jump into things. Let's get into the S&P 500. What do we see going on there? Well, we see that the S&P 500 is up again. That is wonderful to see. We had a weekly vertical crossover all the way back, actually before we started using those, way back in November. And what happened? Well, the S&P 500 shot up until about the week ending the 23rd of December, slid sideways for a while, and then started taking off again at the end of January. And of course, we had our two-day crossover after a little bit of down movement. It didn't give us a jumping in point. And when we look at the 2-hour chart, what do we see happening there? Well, it crossed over and popped up and then bled off a little of that energy and is trying to make its way back up again. And again, we've not really called a jumping in point strongly on this because it's so long in the tooth at this point. What have we been playing with? Well, of course, you all who followed us know how great the Qs has been doing for us, and we'll move on to that. That is Q, Q, Q. What do we see going on there on the NASDAQ 100? Well, this was the first weekly vertical cross, one of the first. It was that in gold, but that we saw where a weekly vertical crossover crossed, and then we jumped in that following Monday somewhere around the 119, 120 mark, and of course we have gone up to 130. I mean, again, $10 in anybody's book. Over the course of a couple of months, a few weeks, we have seen incredible returns. And of course, we're very happy with how well that weekly vertical crossover portended that for us. And we will continue to follow this as it goes along. We also, of course, had a jumping in point later around, what was that? Around the let's go here, somewhere around the 125 mark or so. And that was on our 2-hour chart, and that was also a jumping in point. So what do we see going on? Well, we have seen a little bit of a bleed off if we look at our 2-hour chart. And what happened is we had a crossover there going down back around during the day on Wednesday the 22nd, fell off and then has recovered some over the course of particularly on Friday afternoon, still crossed over going down. We have warned you to just, again, follow that closely if you're still in the Q's position. You don't want to lose the money that you have gained, but you have gained a lot of money. You're still in the 130 mark, which is quite nice. So just continue to monitor that. Don't forget your bigger charts are telling you to stay in. I mean, they're continuing to move up nicely. Again, we don't see as much upward momentum as we did on the 2-hour chart. We see that it's pretty much paralleling, the 2-day chart. If we look at the weekly chart on the Qs, we continue to see strong upward movement with everything propelling up. So don't get greedy. Remember, it's hogs that get slaughtered, so be careful. And of course, $10 is a wonderful, wonderful gain in your practice trade. Now, excuse me, let's keep going. We're going to next go on the weekly chart to TLT. This is one I'm really happy with. Why? Well, we called it back on the week ending the 3rd of February. And what have we seen happen there? Well, we saw the market really slide sideways for quite a while, but our weekly chart kept telling us to stay in, stay in. We saw the derivative oscillator continuing to gain energy. We had that first week around the 3rd, followed by an up week on the 10th, the week ending the 10th. Then we had a bit of a down week and a spinning top. But we continue to see our derivative oscillator move up, and we continue to see the price percent oscillator move up. And then what happened? Well, we had a nice week ending on the 24th. If we explore that a little further, what do we see? Well, we see that indeed the week, as we look at the chart, we saw a bump up on the 8th, that is the 2-day candle ending on Wednesday the 8th, and then sort of a cresting down, and then we saw some up movement on Friday the 17th on the 2-day candle. Then we saw the week beginning with some weakness there on Wednesday, but then that last 2-day candle that ended on Friday the 24th popped up rather nicely from our jumping in point somewhere in the neighborhood of the 119, 120 mark, all the way up to a high. Oh man, the high was up to 122.14. So again, we'll continue to monitor things and see if indeed how strong bonds are going to continue to move up. Again, be careful. You can see how close the 2-day chart is to continuing to just slide along with that movement on the PPO, just barely staying above the crossover point. And you have seen, though, last 2-day candle moved up nicely on the derivative oscillator. Now we're going to go back to our weekly chart and check out what is gold doing. Been in gold for a while. We had our weekly vertical crossover ending on the week of the 27th of January, and we have seen things continue to move up. We had one down week with that week ending the 17th of February, and then we had a nice upward week. We're still well above the weekly trend line. We, of course, had that original jumping in point on the 30th, 31st. If we look at the 2-day candle, what do we see? We see, of course, a huge bump up in that last candle to reach even a higher high. Gold ended the day at 119. Let's see, the last 119.26 reached a high of 119.88. And of course, our jumping in point was somewhere around 113, 114. So again, nice appreciation in gold. Only thing to keep in mind, of course, on that 2-day chart, we are seeing the derivative oscillator losing energy. However, with that last movement, we had a nice uptick in the price percent oscillator. So again, keep an eye on gold. Be cognizant of that. We've had really nice up movements in gold, and we are very happy with that so far. That is where we are. We're going to be preparing for you over the weekend the first weekly market worksheet. I'm going to be working on that as soon as I finish this podcast and get everything loaded up. And we're going to be sharing that with you. We want you to start using that on Fridays or over the weekends before Monday instead of the daily market worksheet, so you can help yourself summarize in your own mind what's really going on a weekly basis. So it's going to help you pull everything together from the last week as you get ready to go into the following week. It's going to be no extra work. You're just not going to do your daily market worksheet for Friday. You're instead going to do, well, for Monday, you're going to actually do the weekly market worksheet. And in fact, it's probably not as much work. So again, we encourage you, if you don't already subscribe, you need to go to chartingwealth.com and sign up. That way you will be able to get all this information, understand what we're doing. We'll send you a link to our How to Read a Stock Chart video, along with both of our worksheets, PDFs for that, along with the layout that we use at freestockcharts.com. Lastly, what do we see going on over the course of this next week? Well, I just want to give you a little bit about what's going on the market calendar, things you might be cognizant of that could affect stuff in the news. I don't have anything saying listing any actions by the Fed. I do see on Monday the 27th at 8:30 a.m. they're going to release U.S. advance reports on durable goods. We also are going to see on Tuesday 4 different things happening. We're going to see at 8:30 the U.S. is going to give its second estimate on GDP. At 9, the U.S. is going to put out its, there's going to be some earnings releases on CoreLogic, Case-Shiller. Some things are also going to be coming out there. We're also going to see Chicago Business Survey around 9:45. And then 10, you're going to have consumer confidence is going to be released. And again, if any of this stuff is super good or super bad, then it can affect things. So just pay attention to that. We'll just continue to watch and see just what's going on. And also that day, so let's see, we're going to have at 8:30, we're going to have the second estimate on GDP. 9:45, we're going to have the Chicago Business Survey. 10 o'clock, we're going to have consumer confidence. So there's going to be a lot of news coming out on Tuesday. Just be prepared. Anything super bad, super good, it might affect things. But again, with the way the market is moving, hopefully we'll have some portending before that happens. Price tends to reflect coming news, doesn't it? So let's also, what do they say on Wall Street? You buy on the rumor, you sell on the news. Let's look, that's the reason we follow the charts. Let's also look on Wednesday, March the 1st. There's going to be personal income and outlays are going to be released. So that's where we are with the news as we end the month on Tuesday. That is the 28th of February. Remember, only 28 days in February, and move into March. On Wednesday, what will we be releasing for you on Wednesday or Thursday? We're going to give you our profit report for the month of February that is going to look very, very beautiful. Remember, what were we? 5.15%, I think, for January. That was with just 2 indices. That was with gold and the Qs. We're going to have gold and the Qs reporting in, and also bonds. So I can't wait to present that to you. Thank you so much. You have questions, problems, concerns. We are happy to hear from you. Happy to try to help you in all the ways we can. If you've not already set up your virtual trading platform, you need to do that at any of the online brokers, and you need to practice with us. We're not a stock calling service. We're an education firm. We want you to listen, learn, practice, and get good at this. Learn all you can from us and from everyone else, and then make your own decision as to what you want to do when you get good enough at doing this and investing your own money. Thanks so much for being with us. We appreciate you. Chartingwealth.com is the website. Go by, sign up, receive these reports every day the market is open, and all the great training we have there. If you appreciate what we do, please go to our YouTube channel and subscribe to our podcast. Also, go to iTunes, give us a 5-star rating, subscribe to us, say something nice about us. God bless. Thanks so much from chartingwealth.com.